crypto is entering one of the most important phases it has ever seen. We are moving closer to a moment where real-world usage, regulation, and institutional participation begin to align. What we're seeing right now isn't about hype, overnight gains, or speculation. It's about infrastructure, clarity, and long-term adoption that's been building quietly behind the scenes. Recently, XRP moved into a stronger position in the market rankings, and at the same time, we've been hearing consistent updates around regulatory progress in the United States and globally. That combination matters more than most people realize. Regulation doesn't slow innovation when it's done right. It creates confidence, and confidence is what businesses, institutions, and governments need before they move serious value on chain. Before we go deeper, if you find value in calm, research-based crypto discussions like this, take a second to support the channel by liking the video and subscribing. It helps more than you might think, and it lets me keep bringing you grounded updates instead of hype. One of the most important developments happening right now is the global alignment around crypto regulation. Europe has already moved forward with clear frameworks, and other regions like the UAE have also established transparent rules. What's interesting is that many countries are now waiting to see how the United States finalizes its own structure before they fully commit. That's not hesitation, that's strategy. When major economies align their standards, cross-border payments and financial flows become far more efficient. If every country created completely different rules, global finance would slow down due to friction. Instead, nations tend to follow the largest markets. Once the US finalizes its approach, many others are expected to adopt similar models, allowing money and digital assets to move more freely across borders. Another major shift happening right now is around stablecoins. Stablecoins are no longer just tools for crypto traders. They're becoming infrastructure for payments, reward systems, and global value transfer. Regulations are beginning to make it clear who can issue them, how they must be backed, and how they can be used responsibly. That clarity opens the door for banks and non-bank corporations alike. Think about how powerful this is. Companies with strong ecosystems already have millions of loyal users. If they introduce digital payment systems that are faster, cheaper, and more transparent, users adopt them naturally, not because they care about blockchain, but because it works better. That's how real adoption happens. The technology fades into the background and usability takes center stage. This is where XRP and the XRP ledger often come into the conversation. Over time, Ripple has positioned itself around compliance, institutional standards, and enterprise-grade solutions. That doesn't guarantee dominance, but it does make it easier for large organizations to experiment without regulatory risk. In financial systems, trust and compliance matter just as much as speed. Stablecoins built on regulated infrastructure can move between different forms of value: cash, digital assets, tokenized securities, and more. That ability to connect systems is why settlement layers matter. It's not about replacing everything overnight. It's about connecting what already exists in a more efficient way. We're also seeing how stablecoins can be used in real-world scenarios, especially in times of crisis. Digital dollars can reach people instantly when traditional banking systems are slow or inaccessible. That use case alone explains why governments and institutions are paying closer attention. Speed, transparency, and accountability change how aid and value move globally. At the same time, the broader crypto industry has matured. This space started with dissatisfaction toward the traditional financial system. Now, after more than a decade of development, the tools exist to rebuild parts of that system in a more connected and transparent way. Tokenization, on-chain settlement, and real-time data integration are no longer experimental ideas. They're being tested and implemented. Interoperability is key here. Legacy systems aren't disappearing overnight. New technology has to work with what already exists. That's why data feeds, settlement layers, and compliance-focused platforms all play different roles. Each piece solves a specific problem, and together they form a more efficient financial network. One of the biggest inefficiencies in the current system is idle capital, money that sits locked in accounts across borders, unable to move efficiently. When value can move instantly and earn yield while unused, it changes how businesses operate. Even small percentage improvements become massive at scale. Regulation has always been the final barrier to this shift. That barrier is now starting to move. Rulemaking takes time, but direction matters more than speed. Once institutions know the rules, they act. Adoption doesn't come from announcements, announcements, it comes from clarity. The next phase of crypto won't feel dramatic to most people. There won't be headlines every day. Instead, crypto will quietly integrate into apps, payment systems, and financial services people already use. When that happens, users won't care what chain something runs on. They'll just know it works. That's how you know adoption has arrived, when the technology disappears from the conversation. We're approaching a period where patience matters more than timing. The people who stay educated and focused on fundamentals tend to benefit the most over long periods. This isn't about rushing. It's about understanding where the system is heading and why. If you've made it this far, you're already ahead of most people because you're paying attention to structure instead of noise. And again, if this kind of grounded analysis helps you, don't forget to support the channel by liking the video and subscribing. It keeps this content going. The next few years will likely shape how digital value moves for decades to come. Stay informed, stay patient, and stay curious. I'll keep bringing you updates as things continue to unfold. What's important to understand is that adoption doesn't happen all at once. It happens in layers. First comes regulation, then infrastructure, then institutional testing, and finally consumer-level usage. Right now, we're clearly moving out of the regulatory uncertainty phase and into the infrastructure and testing phase. That's a major shift, even if price charts don't reflect it immediately. Institutions don't move based on emotion. They move based on risk management, compliance, and long-term efficiency. When laws become clearer and enforcement becomes predictable, that's when large players begin to experiment seriously, not with speculation, but with real use cases like settlements, liquidity management, and cross-border transactions. This is why conversations around payment rails, tokenized assets, and digital settlement layers are becoming more common. Traditional systems were built decades ago, and while they still work, they weren't designed for a globally connected, always-on digital economy. Blockchain-based systems offer alternatives that can operate 24/7, settle instantly, and reduce friction, but only if they meet regulatory standards. One thing that often gets misunderstood is the idea of replacement. New financial technology doesn't usually replace old systems overnight. Instead, it connects to them, improves efficiency, and gradually becomes the preferred option. That's exactly what we've seen with the internet, mobile payments, and cloud infrastructure. Crypto is following the same pattern. Another key factor is education. As more executives, policymakers, and developers understand how these systems work, fear is replaced with informed decision-making. Misconceptions fade, and realistic expectations take their place. That's healthy for the entire market. If you're watching this video, you're likely not here for hype. You're here to understand where things are going, and that mindset matters. Markets reward patience and knowledge far more consistently than emotion and impulse. At the same time, it's important to stay grounded. No single project, network, or company controls the future of finance. This will be a multi-system world where different technologies serve different purposes. Some will focus on data, some on settlement, some on compliance, and others on user experience. The winners will be the ones that integrate well, scale responsibly, and adapt to regulation instead of fighting it. We're also entering a phase where the average user may interact with blockchain technology without even realizing it. Payments will feel instant, transfers will feel seamless, costs will feel lower, and behind the scenes, distributed systems will be doing the work. That's when you know a technology has matured.